All right, hello there. Welcome aboard. This is Ryan from Precision Trading Labs over in New York City. And this video is for you if you have ever thought about trading stocks or trading options and you've tried to decide which one's better, worse, pros, cons. So what I wanted to do is just give you the comparison of a trade on just a normal stock, nothing crazy, nothing super volatile or any of that kind of stuff. That it's a trade directly from my community and a little lesson we did in one of our community calls we do every week. And what I want to do is do a comparison. I've taken the data. This is a chart we marked up during our session. It's a little bit too messy. So what it is, I took out the most important elements and put it into a Google Doc. If you would like a copy of it to analyze, use it as a springboard for analyzing your own stock versus an option trade, which one to take, and the pros and cons of both. Just go ahead and comment below, depending on where you're watching it, or if you've got this video from an email from me, just reply and I'll send it to you. Okay. And if you're watching on social media somewhere, just comment where to send it, and I'll DM it to you. But what I want to do is here. This is a screenshot from my community. Messy. Our students know how to read this, all that kind of stuff. So I'm not going to spend a lot of time here. I'm going to just go over the trade from a technical point of view. If you guys know me, I'm a technician. I trade supply and demand zones on stocks for stocks and futures. And then when you're trading an option, just trading a stock, really. So, but I want to go through all the material that we went through here, and I'm gonna this video may run a tiny bit longer than my normal ones, but what I'm gonna do here is just analyze this Disney short we had in the community at some point, and I'm not gonna spend a lot of time here, as I said, but this is a daily chart of Disney, DIS. Okay, so like everyone's heard of Disney, either watched the movies, been to the parks, whatever. So we had this supply area right here that my business partner Mitch identified and posted to our community, right? So we have that supply area there. You guys can see that big drop. Price a couple of, about 2 to 3 weeks later came up, kisses that level here, and that's where you get into the trade where Mitch posted that green arrow, and these are the boundaries of the trade right there, meaning boundaries, meaning where you're going to get in, we're going to put a stop loss, and then you're going to take profit below here because it's short, okay? So I did not take this trade with the stock. I do it with the option just because it's an expensive stock. It's $100 a share, just better ROI, okay? Great. So you come in here. This is where you need to focus. Price comes in, kisses that area, 96.80, and then it dropped down to 92.60. I think it went a little bit further. Let's kind of just manage our expectations for this video. Okay, if it went further, great, but let's keep it like as a trade went fine, but not like a home run or anything like that, right? So let me go into the sheet I put together in this Google Doc, okay? And I compared buying Disney puts versus shorting the stock. Okay, and more to the point, I have to credit my partner Mitch. Did this during one of our sessions, based on a question from one of our members, and just I'm very comfortable buying and selling stock, just not familiar with options just yet. Wanted to get the lay of the land, so we did a pro con here of using Disney puts versus shorting the stock. Okay, so again, it's shorting Disney, and what Mitch did was if you shorted 100 shares of Disney. Now, if your account can't handle that, that's going to kind of help push you in the direction of trading options. But this particular member wasn't really a buying power requirement. So here's the buying power required to short Disney, okay? Just make that bold right there. So there's Disney right there. That's on a 100-share basis, okay? Got it? So it's on shorting 100 shares, would require just under 10,000 in capital, so 96.80 based on where we get in. Okay, great. So that's the first thing. So you got to have at least 10 grand to put aside pattern day trader, all that kind of stuff. Okay. But to short it, you would need at least 96.80. Okay. Now let's go over and look at the puts and what that would cost, or specifically the way we do it, right? We buy a little bit more time. We don't do these like ODT, zero DTE expiration. So here's one Disney put contract. Don't worry about the expiration date. It was into the future, so we didn't have to worry about time decay. Okay, put that aside. Okay, so that one contract, which is controlling 100 shares of Disney, right, was $700 in buying power. So right now, you got almost 10 grand. You've got less than 1,000. All right, you guys getting this? All right, that's awesome. Awesome. Okay. So $700 is what you would need. A little bit more. Let's just pretend you have 1,000 in your account, so you're using $700 of buying power. Great. Now let's look at the winning trade. Let's look at the profit and loss. Okay. So let's just do. Excuse me. Let's just do the profit on this one. Okay. So the winning trade. Okay. Let me make that bold. Winning trade P&L at a risk 1 to make 2. So risk 100 to make 200. Okay. Um. Let's look at it here. You would have made plus $420 shorting the stock. Okay, $400. You know the trade. How long did the trade take? 1, 2, 3, 4, 5. You had to hold it a week. Okay, so put that aside. That doesn't bother me. I don't know about you, but that's about $420 holding that short position. Okay, and then Mitch put the percentage in here. I don't think of percentages as often as some do, but that's a plus 4.3% return on your money, which is excellent for 1 week of holding. Okay, now that is the return for the winning stock trade. Okay, so shorting it would have made you plus 420, 4.3%. Let's go over here and look at the stock now. The option contract for the puts, right? Plus $240. Okay. Now let's look at the percentage. Plus 34% return on investment for buying the puts. So you made a little bit less dollar value, but your return on investment percentage, 34% in 1 week. That's the beautiful part of options. It's the great part. That's a great P&L, and that's just one contract. Obviously, you know maybe you had a couple $1,000. You could have done 2 contracts, and that would have been solid return for 1 week. Okay, and this is another thing that's not in here because this is just about numbers, right? Is that it was a very low stress trade, right? Like I mean, the trade hit. I mean, if I come back to the chart, right, that's the entry point, right, where you got in. And then the trade just moved along. This is nice, right? You're starting to go your direction. Had a little bit of a move down or move back up. So like, in the trade, you're not panicking or anything, but it's in the direction. And then finally, bam, shot right down, got what you want out of the trade. Okay. So, it was a low stress trade. That's not, I'm not quantifying that. It just depends on how you look at the trades, right? So your ROI, your return on investment is plus 34%. You would make a little bit less if the trade had taken longer, but let's just do a concrete example. Mitch is really good about making sure you guys understand that every scenario is like black and white, But that's the winning trade on the stock. You would have made 420, which is only 4.3%, but you would have made $240, which is 34% return. That's awesome. Awesome return. Okay. Now let's go if this trade had gone the other direction, like if it was a losing trade, right? And they're going to have them. Anyone who says they win 100% of the time is, lying. All right. So let's go on a negative. The trade went against you. You would have lost 210. Okay. So you would have had a $210 loss on 100 shares, which is negative 2.2%. Okay. Now, if the trade had lost on the puts, you would have lost, and then say it happened fast, right? If you guys aren't familiar with options that deep yet, DM me, we'll talk about it. I might have some tools for you. But if it happened fast, you would have lost $110. You would have lost 15%. Okay, that sucks. But cost of doing business, using $700 of buying power, not too bad. Okay, I mean, in my opinion, you can decide what's better for you: the lower percentage loss, the higher percentage loss, or the higher percentage win, which that's just solid. To me, this is like a no-brainer decision. But I also get some of the things we're going to talk about here on what the pros and cons are. Okay, so here are the pros and cons. Right, the stock trade as we see it, and Mitch gave our students it's simple. Meaning, like, he used the word one-dimensional, which is awesome. I love when we talk like that, right? It's a one-dimensional trade. It's a very black and white. The price has to go down. There's no other considerations other than if it goes up or it goes down. Because it's a stock. It's very straightforward. Very easier to think about it, right? Now, with options, there are a couple of different elements. So Mitch has it as a 3D trade. We got to label that somehow. We got to start using that in our somewhere, because that's a cool way to look at it, right? So there's multiple elements to it, right? It's 3-dimensional. So you have, if you guys aren't familiar with the Greeks, don't worry about it, but there's concepts of delta, time decay. Time decay is the longer the closer you get to expiration, the more time you're losing, the less of the value the option has. Okay, that could be a drag on the trade if it's not going in your direction. We will teach you how to completely like not worry about it. So don't worry about that right now. And then IV stands for implied volatility. That's really where options are priced from. Again, something you don't need to know just yet if you're just getting started with options. That being said, even if you're trading options, some of those elements could be why you're losing money in your trade. So if that is the case, if that's the case, you're just either want to get started with options or you're just not making the money you want. Look in the comments or below this video. There will be a link to my calendar. Click the book a call link and we'll do a Zoom call. Just the two of us. I'll answer some questions, make sure I give you some value. And then if it makes sense for us to work together, I will make an offer for us to work together. But I promise to always give value on the Zoom call that we do. Okay. It's never just like a, not a punch in the face kind of guy. All right. So back to this pros and cons. Simple trade, little bit more. I hate to use the word complicated because if you approach this, like I teach my students to approach an option trade like a checklist. More on that later. Okay, now here, the lower ROI, higher ROI is just very straight in your face, just in your face. Okay. And then here you have the narrower ROI range, negative 2.2 versus 4.3. So it's smaller on the loss and it's smaller on the gain. You just have to decide what kind of trader you want to be, right? Here, the wider ROI range, 15 to 21% loss. Let's just go with the 15% since that's like we have the black and white of the trade. So we know it didn't do that, right? To a 30 to 35% profit, depending on time that you were in the trade. Okay, so you have to decide for you which this is better for you. Someone with a decent size account, you may say, I could care less about options. I don't want to worry about time decay. I don't want to worry about IV, all these kind of things, right? You may be fine with that. I have a relatively well-off student in the local to me who's just like he wants to look at big stocks, the PayPal's, the Disney's, Tesla, Apple, those kind of things. And he doesn't want to worry about options. He doesn't want to worry about contracts. He very much gets the system of how we trade the stock, and he doesn't want to make it any more complicated. And his return on investment requirement for his life is, not nearly as high as someone who's got a smaller account and trying to make a life out of this, right? Then you have someone who's starting with sub $5,000. You may look at options as your alternative to really getting the return on investment you want to. Now, this isn't about overnight and manage your expectations when you're getting started. But right now we did a training on 0DTE options and the pros, cons, benefits of it all, and some ways to work on it. If you like that, also send me a message and I'll send you that training completely free. For the way we do it, I just prefer the option because it's a whole lot less buying power. That's my first requirement, right? So that way, if the trade the company went bankrupt overnight, you would only lose what you put into it, right? That's not going to happen with a lot of the stocks we do. Disney is not going anywhere. I like that I can use very small amount of buying power and get a really nice return on investment. That's really what it is. The percentage return, for me, I look at that loss as okay, if it's $110, as we labeled here, if the trade went against you, let's just use a fast example, not the slow, right? So if it went against me 110 and my average risk per trade is 150, $200, all right, buy one contract, maybe you can do two, right? All right, I'm okay with that loss. Let's think of it that way. And then if I made plus 240, this is also with the trade only going a short distance, meaning it's a 2-to-1 trade. That's kind of like a moderate return, not if you guys have seen some of my other videos where I went through a 3-to-1 trade and all those kind of things where you're risking 1 to make 3, that you're getting above average then. Whereas 2-to-1, it's okay, it's very good, you're happy. Can you get started that way? Amazing, all good. But we really temper the expectations for this training. So I wanted you guys to see this and really see the return on investment versus one versus the other. And really to me it's about the buying power. If you're starting with a small account, or even if you're not, but you're not all that confident in your skills just yet, you don't want to throw good money after bad. Really don't. You're starting with 15, 25, preserve that capital. That's your seed corn. You've really got to protect that. Okay. So make sure you're doing that. Anytime you get into a trade. And if you don't have all of these elements, that's fine. What I'd like you to do is just come to me, shoot me a DM, if you would like this, I'll put the chart in this document. I'll send you this document. And then if you really want to take this more seriously and you really want to put the time into learning this stuff, go ahead, grab my calendar link, click the calendar link. You'll see the days I'm available, click the day you're available. Also, you'll find a time that I'm available. Fill in some quick information. You'll get hit the submit button. You'll get an email and a text message. You'll get the Zoom link. Just show up at that time, and I promise I'll be there. I will build one of these trades in real time for you. To me, trading is like breathing, so it's just like a I can find good and bad trades, and inside of a couple minutes. So go ahead and do that. Really appreciate it. If you like this video, please go ahead and hit the like button. Really appreciate that. Always tells the algorithm we have good stuff. And again, if you like this document, just comment below and I'll send it to you. But that is my video on comparison of trade using either a option versus a stock. So have a good rest of your day, and I will talk to you soon. Take care, guys. Bye.